There's only one thing that you need to get good at identifying support and resistance in the market. We've learned how to define them properly, how to connect them with supply and demand, and how to tie all of that together with the current trend. Later in the video, I'm going to explain how I used support and resistance to help me trade the Australian dollar in the trade setup that I showed you at the start of the module. But let's talk about how you can get good at drawing areas of support and areas of resistance yourself without relying on any fancy tricks or automated tools. Like most things in life, there's no magic solution to getting good, and trading is exactly the same. The more that you work at the skill of finding support and resistance in the market, the easier it will get and the faster you'll be able to do it. So all you really need to be able to do is practice. Practice, practice, practice. And that starts with doing quality trading drills. So I've put together an exercise that will really help you get good at identifying support and resistance. All you're going to need is any charting platform, MT4, MT5, trading view, doesn't matter which one you want to use, and the line tool and the rectangle tool, just like I've been demonstrating in the previous videos. What's different this time though is you're going to be using the leading edge of the market, and that is the current price, the current information that has been happening in the market. Also as well, try and do this type of work at the weekend, not only because you create a little bit more free time and space for yourself at the weekend, but also the market is closed, so you don't have any distractions to contend with from either the price moving up and down or any online forums or any open positions that you've got going on in the market at the time. You've got lots of space and time to just concentrate on doing this exercise. And this is what you're going to need to do. You're going to need to select two markets, any markets that you choose, and two different time frames. We need a bigger picture time frame, so potentially a daily time frame, and then also something intraday, maybe a 1 hour or maybe a 30. On the first market, we're going to use the daily time frame to define an uptrend. So we need a daily time frame uptrend to work with. And then on that market, for the shorter time frame, we need a retrace that is showing us some form of resistance. On our second market, we need our daily time frame to be a bigger picture downtrend, and then we are pulling back on a shorter time frame on a 1 hour or a 30-minute where we are creating support. And this is what that's going to look like. You can see my bigger picture trend here is an uptrend, and I've mapped in my areas of support. However, on my shorter time frame, as the retrace starts to happen and I'm coming back down to the support, I've mapped in on the faster time frame an area of resistance. The exact opposite for the chart on the right hand side. This is a bigger picture downtrend to the left on our chart, and you can see I've put in the area of resistance, but as we've formed this swing low bottom here and we've started to retrace back up on the shorter time frame, I've mapped in the area of support. And what you'll be able to see when the market then reopens up, I want you to observe how the market interplays with this bigger picture support and this shorter time frame resistance. In the downtrend, how the market then interfaces with this area of resistance, which is a bigger picture area of resistance, against this smaller area of support. What this is going to do is it's going to help you tune your eye into where the next area of resistance is versus where the next area of support is. Now that exercise was the exact process I used on trading the Australian dollar. You can see the downtrend on this daily time frame here. If I move down to a 1 hour time frame, you can see here my area of resistance really nicely mapped in that bigger picture downtrend. Down to a 15-minute chart, you can see once we've formed the bottom, that's my first area of support that I've formed. And that is the framework that I used for finding the near-term resistance against the current area of support that was forming. The only other difference is that I used an indicator called the RSI to help me fine-tune my entry. You can just see the divergence as the price makes a higher high into the resistance and the RSI diverges, making a lower high into the resistance area. That was the reason for then looking to get short into the market and then try and trade it back down.